I'm doing an interview style that I've never done before. I'm interviewing an actual trader, someone that I found on YouTube because they were so helpful. DejaBrew, that's their name. And he agreed to go on an interview to show you guys these awesome techniques he uses. That's really helped me, and I know you guys are gonna love him too. So DejaBrew, welcome to Modern Wall Street. Thanks for coming on the show.
Thanks for having me.
Well, first I have to ask you, and I don't know if this is a secret, I hope it's not because it's been brewing in my mind. What is DejaBrew? Where did you get that?
It's actually, it started like off of a gamer name that I used to use. I used to play a lot of games back in the day. On my games, I go by DejaVu, and then I just switched it to DejaBrew for my trading. It just kind of stuck in the crypto space. Everyone likes to be a little anonymous, so they all have their fake avatars and they don't go by their real name. Since I started my educational content in the crypto space, I kind of just stuck with the anonymous handle and not using a webcam for the most part. I'm kind of getting back into being in the stock world where we go by our real names and we show our face and everything.
I'm like, oh God, I think that's DejaBrew. He's at the Starbucks down the corner. How did you go from trading to educational videos?
So I actually started on Twitch back in early 2018. I wanted to start a live stream for my trading for more of myself. I wanted to like kind of journal my thoughts throughout the day, like draw out some levels, kind of talk to myself. And then I realized people were joining my stream and listening to me, and they enjoyed kind of my process. And they asked if I could make some videos, and they asked if I could make a course. So I went ahead and made a course for them, and I made some videos, and I realized they were getting a lot of traction on YouTube. So I kind of just kept doing it.
I thought it'd be fun to do some popular stocks, and if you don't mind typing them in.
Take a look at them. Yeah.
Okay, cool. HIG. I don't know what this stock is.
I have actually never seen this.
I haven't either.
So this one, it looks like it's just a very long accumulation. So I would take probably this level here, and I would look at this more of a range. But this is actually almost putting in one of my favorite patterns, which we call bulldog.
Bulldog?
You have a bottom, a curved back, another bottom. These are the legs. Pop up and a pullback. This is actually what we call a miniature bulldog. You don't have a high neck. We have a lot of animals we trade. We trade giraffes and camels and miniature bulldogs.
I've seen a bulldog and I've never seen that pattern before. So
yeah, this is actually an extremely high strike rate pattern. If you see this, you'll love it. So this one has a lower strike rate because the neck is so small. But you have the two legs here. That's the bulldog back. This would be the neck, and then this would be the head. So when the head breaks or during the head's pullback, you could buy this. And now you're actually breaking out of the bulldog head. So this would be extremely bullish.
And that's on high volume right there.
I can actually show you. Let me pull this up. I have a couple of examples of this.
Okay.
Let's see. Here you go. Here's a perfect example. So these are the two legs. That's the back. You pop up. You typically pop up to the back, and then it puts in a miniature bull flag. This becomes your buy point, and then it breaks out. And this is what you would target. So you have the first resistance, which is typically the back. Once you break the back, you target a 50% retracement, an extension, or a 618 extension. And then your final target would be a 100% extension. So the length of the entire bulldog would be your final target.
Wow. So it looks like the feet or the legs, whatever you want to call it, those are little mini consolidations.
Yep.
Oh.
So like this
pattern.
Oh, I'm telling you, it's our favorite pattern. So typically, if it's on a way down, so what it is current. So let's say there's a move down, and then you have the bulldog. This is a much higher strike rate than if it was a move up. I don't know why exactly. It just seems like it's a better reversal pattern than it is a continuation pattern. I would put about a 70 to 80% strike rate on this one, and probably about a 60 to 65% on the continuation one.
Okay.
But yeah, if you see this, it's almost always worth trading. And you can either take the aggressive trade where you have the pullback, you could take it here, or you could take the more patient trade where you break the head or you break the back. And we have a lot of these. We have like a camel where you have the bottom and it kind of puts in a back and then it puts in another back. And then it does the same thing. And then we have the giraffe where it puts in a bottom and then the head is really long. And then it puts in the head there. And they're all worth trading usually.
Wow. Like you said, you have a whole zoo.
Exactly. Yeah.
Well, it's nice to hear because for me, I would look at this and not the bulldog's back to me looks like a head and shoulders pattern.
Definitely. Yeah. This would be a head and shoulders. So this would be like a consolidation point, and then it puts a head and shoulders, and then it fails. And then you put in a little consolidation here. And typically, if it's a miniature bulldog, these are a little higher risk because you're below this resistance. So you see how the neck here on the bulldog is below that resistance?
Yeah.
That's why it's a lower probability trade.
Gotcha.
But if this were to like push all the way up here before consolidating, this would be a better trade because you've already broken that resistance. You break the resistance and then you consolidate and then you break out.
Wow.
So bulldog is a double bottom with a curved back and a miniature bull flag.
I want to pet the dog. I want to pet the dog and trade the dog.
Yeah.
Okay, let's do one more closing chart because I'm going to pull up a popular stock. All right, guys, this is your grand finale. Okay, here's a drum roll. Tesla.
Yep.
Did you know that was coming?
I did. We had earnings today. Let's take a look. I actually haven't looked at it since the earnings bell. Let's take a look at it.
Good finale.
So it's actually slowly rising on earnings. So we are currently, let's mark the current price. So on earnings, we're right around, it keeps moving. We're right around 432. Let's go back to the daily. This is actually putting in, do you spot it? Do you see that the bulldog that we talked about earlier?
No, I don't.
It's kind of a higher leg bulldog. Okay. So you have a little point here, another point here, and then we're putting in that head. So then you have that breakout, but it kind of failed here. So if you go back to, I think I have them here, that first resistance point on the bulldog is actually what's failing here. You have the back of the bulldog causing Tesla to pull back here. So if we were pretending there was not earnings right now, I would not be trading Tesla here because you are not breaking the back of the bulldog. And I've actually been telling my whole group for weeks now, Tesla has to find value above 450. And what I'm referring to is the back of the bulldog. Mm-hmm. It has to find value above the back of the bulldog. If it doesn't find value there, you're going to retrace back towards the low of that bulldog. So you're kind of being saved right now. You were almost about to do it. You were just about to retrace back to the low, but we had good earnings. So now with good earnings, I still have that same level in mind because we didn't break it. You're at 432. You have to get above the back of the bulldog. Anything below this back here, I don't care about. This is all chop. So you're either taking a failure trade from here to here, or you're taking a breakout trade from here to, let's see. This is where we pull up our handy dandy fib tool. And you have that, you have what I call the fake out level. It's a 0.13. It's a Fibonacci number. Mm-hmm. It has to get above the 0.13 before it pulls back. So if it pulls back, let's say it goes to like 462 and then pulls back, that's bad. Okay. But if it breaks that 0.13 and then pulls back, that's okay. If it doesn't pull back at all, that's also okay. So if we break the 0.13, you're targeting 515 and 530. So any break of 450 and you find value, I'm going to keep a close eye on that fake out level, but my overall targets are going to be 515 and 530.
Awesome.
And a perfect example of this technique, I have a video on my fib technique.
Oh, you do?
I called the exact top on SPY almost to the penny 100 days in advance.
No way.
So yeah, And let's see, I don't know if I remember exactly which fib I used. Let's see. I think it was this one here. No, it wasn't. Let's see if I can find this. Was it this one?
Ladies and gentlemen, we have something to prove that
Oh,
the
here you go. Here you go. So when I made my Fibonacci video, I was looking for examples to kind of show people what the fake out level does.
Mm-hmm.
So I took this low on SPY all the way to the most recent high when I made the video. So I made the video right here when I put in this high. Look at where we topped out on
Oh
SPY.
my God.
And it topped out almost to the penny on that 0.13. And then we had the coronavirus nuke. In that same video,
insane.
using that technique, I predicted the bottom on Bitcoin, and then it ran for like $4,000. So definitely watch that video.
Yeah, I definitely have to. And like you said, there's a fake out to the top. Is there a fake out to the bottom? Is that
So it would be the same way. So let's say if we thought that, so let's actually see how you could have traded the coronavirus. So we had this little fib downward. This would be your fake out level. So if it got below that level, which it did, and then it pulled back, that's still bearish. Because like I said earlier, if you break the fake out level and then pull back, that's okay. You're most likely going to continue. So you break the fake out level with this day here, you pull back to the fib there, and then you nuke. And then same thing, you have your you have your targets right there. So as you're falling, you can just keep taking new levels. So like we could have taken the all-time low, or not the all-time low, the coronavirus low. And if we thought this was going to go lower, this had to break that fake out level.
wow?
So if you wanted to buy this, it could go down, and let's say it consolidates here. That's a really good buy because you're not breaking the fake out level.
Oh my God. That's insane. That is something I did not expect in this interview.
It will help you a lot. If you like trading the bull flags, add that one line, the 0.13. It will help you a lot.
Guys, we got to add the 0.13. What you have to do is follow DejaBrew on Twitter. Get to his website. It's all brand new. It's going to be awesome to view that. And check out his YouTube tutorials. They are so helpful.
Thank you.
Thank you so much, Deja, for taking the time. We're going to get all your information there for the viewers to check you out. And thanks for talking with me today. It was really fun.
It was fun. I appreciate you having me on.